Hey everyone, welcome back to Peaceful Investor. Today we are going deep into a company that plays an important role in healthcare and technology. Tandem Diabetes Care, ticker symbol TNDM. We will look at what the company does, how its business model works, and then break down its latest Q2 2025 financial results. I will explain everything in easy to understand language. So, even if you have never studied a medical device company before, you will come away with clarity. Finally, I'll give you my honest thoughts as someone who has been investing for over 3 years. Let's start with the basics. Diabetes. Diabetes is one of the most common health conditions worldwide. It's when the body cannot regulate blood sugar properly. For many people, that means they need to take insulin every day. Traditionally, insulin is taken through multiple injections, a tough routine to follow consistently. That's where technology comes in. Insulin pumps are designed to make life easier. They deliver insulin continuously and more accurately. Instead of having to remember every shot, the pump does the work. This improves health outcomes and quality of life for patients, and that's the space where Tandem operates. Tandem is a medical device company focused almost entirely on insulin pumps. Their flagship product is the T Slim X2 pump, which looks like a small touchscreen device, almost like a mini smartphone. This pump connects with continuous glucose monitors from companies like Dexcom or Abbott. The pump and the CGM work together. The CGM checks blood sugar and the pump automatically adjusts insulin delivery. Tandem calls this technology Control IQ. Tandem also has a new pump called Mobi, which is smaller and designed for easier use, especially for younger users or people who prefer something more discreet. Recently, Mobi received European regulatory approval and Tandem is pushing for approvals into other regions too. Now, here the clever part of their business model. It's very similar to the razor and blade model. Tandem sells you the pump that's like the razor handle, but then you need to keep buying supplies, cartridges, infusion sets, and other accessories. Those are like the blades. The pump itself brings in one time revenue, but the supplies bring in recurring revenue, and that's what gives Tandem stability. Now let's dive into the numbers. In Q2 2025, Tandem reported 240.7 million in revenue, which is an 8% increase from last year. For a company in this space, that is solid growth. About 21,000 pumps were shipped in US and 9,000 outside US. So the nearly 30,000 pumps in total. The fact that almost a third came from outside the US tells us that international expansion is becoming more important for Tandem. Their gross margin, basically how much money they keep after paying to make the pump and supplies, was 52%. Last year it was slightly lower, so they are moving in the right direction. For the full year, they expect gross margins between 53% and 54%. Operating loss was 52 million. That is the key issue. Despite growth, they are losing money. For the full year 2025, management expects 1 billion in revenue, which is 700 million in the US and 300 million outside US. Gross margin of 53 to 54% and adjusted EBITDA still slightly negative. On the top of this, they spent 20 million on litigation settlement, 75 million on in-process R&D, 95 million expected in stock-based compensation this year. So while revenue is growing, profits are nowhere in sight. As of today, they have got 315 million in cash and investments, and the debt is minimal. Again, strong growth but no profitability. Despite losses, Tandem is making strategic plays, moving supplies into the pharmacy channel in late 2025, easier access for patients, more stable and recurring sales, integration with Abbott's Libre 3 Plus CGM in the US strengthens ecosystem, Mobi pump approved in Europe expanding reach, FDA filing for an extended wear infusion set more convenient strengthens customer loyalty. These are smart moves that could push revenue higher, but unless expenses are controlled, profitability remains the hurdle. From an investor lens, strengths, innovative products, recurring revenue model, improving gross margins, and multiple growth drivers. Weaknesses, still losing money, heavy stock based compensation, strong competition from Medtronic and Insulate, and dilution risk if profitability doesn't improve. The growth story is attractive, but the financials are not yet aligned with investor expectations. Here my take. Tandem is a show me company. It has the technology, it has growth, and it has catalysts. But until it proves it can turn revenue growth into actual profit, investors should stay cautious. I would see in the next 2 to 3 quarters gross margins hitting and holding 54%, pharmacy channel boosting recurring revenue, operating expenses growing slower than sales, proof that Abbott and Mobi launches drive adoption. If Tandem delivers, it could become a strong long term winner. If not, the risk of dilution and losses will weigh on the stock. So my conclusion, Tandem has big potential, but biggest challenge remain the same profitability. What is interesting today is valuation. The company is trading at a price to sale ratio of 0.85 times of revenue. In simple terms, the entire company is valued at less than what it makes in 1 year of revenue. In the past, the market value tended much higher, so right now it's being sold very cheap. This is a classic high risk, high reward setup. From my personal experience working with pharmaceutical company, I know how important diabetic devices are. Yes, fundamentals aren't great today. They are losing money and carrying debt. But I am starting with a small position. If management executes and delivers on their promises, I will look to increase that position in the future. And just to be clear, if I'm buying, that doesn't mean you should buy as well. Always do your own research and invest according to your own risk tolerance. I hope you liked today's video and please subscribe my channel so I can keep bringing these kind of videos for you. Thank you.